Setti, how you doing?
Rich, I'm doing all right. How are you?
Great to see you. Welcome on the show. Hope you're having a great day.
I sure am. How about you?
Uh, I'm having a great day. Excited about having you on the show to talk about Cizzle Brands. Excited about this giveaway. Can you talk a little bit about the giveaway first for people that are watching? What is this giveaway all about?
Sure. So, what we wanted to do is we wanted to basically let the community try the product, right? And I think that this is a great way for us to, incentivize people to share the story. And if they do, then, we'll be able to ship over a bunch of the product. They can try it and actually see that, compared to anything else that exists on the market, this is by far and away, some of the best stuff that you could possibly buy. And anybody that we give them the product to absolutely loves it. So I think, I think for your audience especially, you've always been great supporter of ours. So just wanted to do something to give back a little bit and make sure that we can get the product in everyone's hands.
Yeah, it's great. We've got some members already messaging that are excited about trying the product, and I've already tested the product. The first two products that came out, you guys sent me some samples, and they went very quickly. I like them. My friends like them. My kids like them. They taste good. It feels good. When I drink Prime, it just tastes like sugar. My kids, because of marketing, because of Logan Paul and KSI, my son especially.
Rich, I tell you, like Prime's almost like diabetes in a bottle.
It tastes like it. It just tastes like pure sugar. Like
it is.
I had one little taste.
The reason it is because like you have like the base on Prime is coconut water, right? Like that's how they kind of get around because coconut water has a natural electrolyte in it. But kids don't like the taste of coconut water. So in order to get it to taste like something you actually want to drink, you have to hyper process it to the point where you don't taste any of the coconut water, which then goes back to why you're using coconut water in the first place, right? And I think for a lot of people, like Prime was one of those things that sort of took the world by storm very, very quickly. And kids liked it, but they liked it also because it wasn't everywhere, right? I got young kids too. And a couple years ago, you were the cool kid in school if you brought Prime to class. Well, now I ask my son, he's 11, and I'm like, what happens if you bring Prime? He goes, well, you're a loser. nobody really wants to be bringing Prime to school anymore because it's available everywhere. It's not cool because it's unique. And, because we got a lot of, former colleagues from, our previous company that now work at Prime. And they tell us like the only real volume they end up seeing is on these limited time offers, and the core flavors nobody's really buying. So they're kind of turned it into Pokemon cards, which is cool. I mean, it's a novel way of thinking about CPG. The problem is you don't consume Pokemon cards. So you end up buying it to sit on your shelf to say that you have it. Maybe you drink one of them, but you're not really getting any of the consumption or reorder. And they're starting to see their volumes kind of fall off a cliff. And this is where I think that we have this, enormous opportunity ahead of us, because we can go up and sop up a lot of that volume with a product that people actually drink regularly and that they like and that is clean and that is good for you. And ultimately, that's the kind of product that we made, right? Like we obviously want something that tastes good. I mean, you could have the best product in the world. If it tastes like crap, nobody's going to drink it. But you make something that tastes good, but that is also super clean. So that way, when mom and dad are looking at the ingredients or they're trying it themselves, it's like they feel good about giving it to their kid, right? Like you get sign off by mom and dad on something that the kids otherwise think is cool. And that's really sort of the marriage of those two worlds you want to achieve. And that's, I think, one of the things that we've done extremely well.
Now I see that you've got the you've got the two jerseys there.
Oh yeah, some of many.
And and obviously you guys have lots of star power behind this deal.
Yeah.
You've got Andrew Wiggins, all-star NBA champion, Toronto boy, who's also an investor in the deal. Super exciting. And you've got Nathan McKinnon, who just won the MVP of the Four Nations Face-Off, Stanley Cup champion, NHL All-Star, one of the best players in the league. And he's a brand ambassador. Just to mention two of your brand ambassadors, can you talk a little bit about the star power you got involved in this deal?
Yeah. And listen, I think one of the important things is when you look at a lot of other brands that try to leverage athletes, they try to build a brand around an athlete, right? We try to build a brand athlete wants to be around. And there's a subtle but important difference between those two things, where it's really based on the caliber of the product that we make. So, Nathan McKinnon is easily one of, if not the best player on earth right now. And he's not the kind of person that signs on to just anything. We developed this product with his trainer, Andy O'Brien, who's on our staff. So Andy is easily one of the greatest trainers in hockey, if not all of sport. And he's trained Nathan McKinnon since he was a kid. He's trained Sidney Crosby since he was a kid. There's a reason they can still call him Sid the Kid, because, I think a lot of it is due to the training that he does with Andy. He's won 3 Stanley Cups. He won it with the Florida Panthers last year. And the guy is as meticulous as the day is long on sort of the ingredients that he wants to put into a product.
It's very unique. You guys have been making so much news, so many waves. The news is crazy. It seems like every week I see another store, another chain, another.
There's a lot more of that to come.
Another brand ambassador. Like, it's hard to keep up with. It's constant. It is constant news flow, which leads me to my first question.
Yeah.
CZL Brands is putting a lot of news out since its IPO, which I mentioned. Can you walk us through the key milestones the company has achieved so far?
Sure. So one specific one that I don't think the market's fully appreciated yet is the release that we did with Van Hoot. So for people who don't realize this, Van Hoot is owned by Keurig Dr. Pepper. Now, even for me, before I got into this space, I thought Dr. Pepper was just a brand that Coca-Cola carried. It's not. There's basically 3 main CPG distributors across North America. There's Coke, there's Pepsi, and there's Dr. Pepper. So for us to go and say that we've done a distribution deal with Dr. Pepper, would be like me saying I've done a distribution deal with Coca-Cola or Pepsi, right? It's massive. Now, the Van Hoot side, what they helped us do is this last mile delivery. So one of the things that we've gone out and done, there's a couple of different ways that you can look at CPG. Sometimes when you're these larger companies, you tend to try to push it down into distribution, and you hope that when you put it on the shelf everywhere, that eventually people will start buying it. That's a very expensive proposition. The other way is a bottom-up approach, which is what we do. We go out and build all these grassroots campaigns. So we go and work with, all of these high-end youth athletes, single A, double A, triple A hockey. We're doing some stuff with volleyball. We're going to be doing some stuff with basketball. We're looking at doing some stuff on the football side. And you go in and you kind of start creating these brand presences. So I'll speak to hockey. So we went out and did, these sponsorship deals with tens of thousands of kids that play single A, double A, triple A hockey across Canada and the US. All right. We put them on a patch program. So they get a patch for their jersey, a sticker for their helmet, a branded water bottle, a branded face towel, and, a bunch of sample product. And these kids, they're high level athletes. They're playing hockey 5 to 7 days a week all year. Right? Which means they're wearing our brand 5 to 7 days a week all year. Then we go do deals with all the arenas that they play hockey in. So we'll have product in the concession stands, in the vending machines, in the pro shop, right? That's how you actually build grassroots demand, okay? Because they're immersed in the brand and they try it, they like it, they want to buy it again. Great. You start building your core village. As that starts to grow, then you get the parents that are coming and saying, all right, where else can I buy this? Can I get it at a grocery store? Can I get it at a drugstore? Can I get it at a convenience store? That's how you build demand. So that way, when you go and place it in these locations, it actually starts to turn. We'll get to that in a sec. Now, when we started doing all that, Van Hoot comes and says, well, listen, it's got to be expensive shipping small shipments out to all of these individual places. We can help service that, which is amazing. Okay. And that actually helps us do it in a much more cost-effective way, because that last mile shipping is extremely expensive, especially in Canada, which is a very disparate market. It's not as concentrated as it is in the US. You have your major hubs and then your sort of other cities that surround it across all the provinces. But to go out and basically service all of Canada on your own, you'd almost be selling product at a loss. This allows us to do it in a very profitable and efficient manner, number one. Then they come back and say, hey, by the way, we service 30,000 locations across the country. Van Hoot. So if you've ever been in an office that has coffee, I guarantee you 9 times out of 10, it's Van Hoot providing that coffee service. So they come to us and say, okay, we're going to help do the distribution for you on your stores, but why don't we also carry your product so then we can go sell it into ours, which is amazing. Now, when you take a look at these 30,000 locations, offices, warehouses, stores, all of these places they otherwise have coffee, run an average of $1,000 a year in sales. Now, to put it in perspective, our opening order oftentimes for a store is about $5,000. Opening order. Call it $1,000 a year. Cut it into a fifth and amortize it over a year. Well, 30,000 stores at $1,000 a year is $30 million in revenue. And that's at the low end. That's the piece that we're working with them on now. They've already brought us McEwen Gas, and that happened within a week of us signing the deal. And now we have huge programs going out with them to basically go off and start commercializing across all those points of sale. So I think that contract and that partnership is of huge, huge, huge importance to us. And I don't think the market fully appreciates what that means yet. They'll see it when we start reporting numbers on it. But I think there's a bit of a disconnect between us putting that news out and the market actually understanding. And, for all of the other retailers that we've announced that we're going in and placing product in, I think it's also important for a lot of people to understand. And we'll have news out on this, in the next little bit. But I don't know if we really have any accounts that haven't reordered multiple times yet. Because CPG really is three things, right? Can you make a product? Can you put it on a shelf? And can you get it off the shelf? Number three is the most important thing. Okay? So, yes, we can make a product and we can make it at scale. Yes, we can get it on the shelf because you see the press releases. And yes, we can get it off the shelf. And that's all the grassroots and marketing efforts that we're doing to basically help drive consumption. You do those three things and then repeat and repeat and repeat and repeat, and you have yourself a phenomenal business. And I think that's exactly where we're at now.
Yeah, it's really exciting to see it evolve and grow, and it's happening very quickly. And like I said, I've tasted the product and I've given it to strangers that liked it and given it to friends who've liked it, and everyone I've given it to has liked it. So my question now is about these tariffs, because the tariffs have really kind of spooked the market, especially here in Canada. And since launching, you guys have added numerous new accounts that are now carrying the Quench drink, like you mentioned. And there's a lot of fear in the market because of the tariffs and talks that are happening in Canada and the United States. Can you explain to investors that are watching how the Cizzle Brands might be a good opportunity with all the fear in the market, and how maybe you guys will not be as affected as some other companies by the tariffs?
Sure. We can make product in Canada. Actually, we do make product in Canada. We also make product in the US. So we don't necessarily have to cross borders with where we make our product. Now, the beauty about that is if we're making product in Canada and we're putting it on the shelf, our price doesn't need to change because it's not affected by the tariffs. But our competitors will. So now all of a sudden, I have an even more compelling value proposition over everyone else if those tariffs come. Like, we can compete as is, no problem, right? But as it starts to, if and when it comes, we're locally made. So I don't really have to pay the tariff to cross the border. Likewise, I have opportunity to make in the States as well if those tariffs come in, which means then it's a US made product. So I think we're uniquely positioned versus a lot of our competitors, where if they come, great, and if they don't, we're still going to win. So we're not really worried one way or the other.
Okay, great. And with expansion growth and with rapid growth, sometimes you get spread too thin, right? I've seen this myself with business. I've seen it with other companies. They expand, they get spread too thin. What does this mean in terms for investors of your revenue growth and overall brand positioning in the market with all of this rapid expansion you guys are doing?
Look, I think we've got a phenomenal team. And I think one of the things that maybe we don't get the benefit of, and again, this just comes with time and, as people kind of get more familiar with us as a company and us as sort of individuals. Like, a lot of this team's had the benefit of working together for the past 15 years. So the culture's already been built. Like, everybody knows how to work with each other. It's not like you kind of picked, 30 different people and just put them in a room and said, figure it out. Like, there's a lot of camaraderie that already exists within, these four walls that we work in. And the relationships are also there. So as we're going out and expanding, yes, we have the sort of manufacturing capabilities to keep up with demand. We pretty good on demand planning and sort of forecasting out. And in fact, even on sort of aggressive demand planning, a lot of the orders that are coming in are kind of exceeding and outpacing what we would have originally thought, which is a wonderful problem to have. But given the relationships that we have with a lot of the buyers in the space, and a lot of the trainers, and a lot of the athletes, and all of the different points of distribution that we otherwise sell the product into, even when we're looking at opening up new categories, it's not like we're starting from scratch and then having to go out and build relationships and go off and sell it. It's typically the same buyer that's buying it. And especially now that they're starting to see this product turn off the shelf so, well, and, from a retailer standpoint, they're turning great margin and, the velocity's there and the product's selling, they're coming to us saying, all right, this is great. Like, what else do you have? So I think for us to be in that position, obviously, we're very fortunate to sort of have all of those relationships in place and be able to go off and execute against it. But, I think we've got a real killer team here. And, as you can see, even in the cadence of the releases and how we're sort of adding new accounts, it's not going to stop anytime soon. Like, as far as we're concerned, we're basically, we're barely at a base camp, let alone, up Mount Everest yet.
Which is impressive because like I said, I mean, obviously I've interviewed over 500 companies. I've worked with many companies over the years, from Canadian companies to US companies to NASDAQ companies down to TSX companies and NEO companies. And, and it's, I have not really seen too many companies that have this type of news flow where it's like once or twice a week, there's a new acquisition, there's more expansion, there's new companies, new major names, brand ambassadors, and sales, like, which is, we got 305 people watching on X alone. This company has sales guys. They have revenue. And let's get into that. How does account expansion translate into reorders? You mentioned that a little bit. Are you seeing strong demand from newly onboarded accounts? And what factors contribute to continued sales?
Sure. So like we started end of May. So our year end is July 31st. Okay. And we started late May last year of sales. So really like June and July. So that would have been Q4. And we reported 2.1 million in sales. That's net sales. So typically when you're going out and doing sales like this, like you'll have some deductions for trade spend, you'll have some deduction for listing fees. So when we say 2.1 million, that number's already been deducted. So that's net sale. So we did 2.1 really in our first quarter, which was our Q4. Then we went into Q1, which was August, September, October, and we reported 2.78 million in sales with a 62% gross margin, which, I mean, in this space, if you've got a margin in the high 30s, you're doing phenomenal. So, I mean, we're blowing that out of the water, which is great. I think it really speaks to the value on the brand that we're creating. Now, Q2, which we'll report in 2 weeks, Q2 will always be our slowest quarter. Why? Because November you get buying, December is always, a bit of a dud month because a lot of retailers, if their year end is December 31st, they're looking at blowing out inventory as opposed to buying more. And then January, half the month everyone's on vacation. So it really works out to be about half a month. That all being said, I think everyone will be pretty happy with how we did on Q2. And then Q3 and Q4 are always going to be our strongest quarters because especially in the hydration side, as you're leading into spring and summer, that's where sort of the ramp up really starts to happen. So for us, I think we've got very, very strong revenue growth. Like we're projecting to do about 15 million in sales this year. So from August to August, which again, for a company that's barely a year old, I think you'd be hard pressed to find anybody, whether in Canada or the US, that's doing 15 million in sales in their first year. But on the reorder side, it's like I said earlier, I don't know if we have any accounts that haven't reordered multiple times yet. Like the demand that we're seeing on shelf and the sell-through, so what we call velocity, but we'll have some news that'll go out on that over the next little bit. But like the data that we're seeing on our end is way above what we would have originally anticipated. So again, I think that's a kudos to the marketing team. Obviously, a kudos to the sales team who has done a phenomenal job in making sure that the product's merchandised properly, to get your planograms done, and then on the marketing side to help foster that community and really sort of build excitement around the brand. And again, it helps that you have a product that tastes good, that performs great, and this is just the beginning, right? Like the drink, we're more than just a drink company. Like we just launched Spoken about a month ago. So Spoken is the high end sort of athlete grade supplements, proteins, one a days. Like there's two specific products in that mix that are phenomenal. There's Athletic Greens and there's the Sleep Builder, right? I was actually in Vancouver this past weekend. There was an investor conference that I was out presenting at, and everybody loved it. But one of the things that kind of stood out too, I mean, AG1 is basically built on doing Athletic Greens. They do about $1 billion a year. And I ask everyone the same question: like, who's their competitor? And nobody has an answer, because I don't really think there is a real viable competitor. We make a fundamentally better product on the Athletic Greens side, and that product alone is doing $1 billion a year in sales. So there's a huge market opportunity for us. Just one, the Sleep Builder is another one that is just a phenomenal product that actually helps people achieve deeper, more restful sleep. And even when we give it to pro athletes and they're tracking it on their Apple Watch or their Oura Rings, and they're coming back and saying the recovery that I can experience with a product like this is unlike anything I've ever seen. So as we start getting that message out into the market, that's a huge up vertical for Cizzle. That really, again, is, I think, underappreciated by the market at times. But I think the runway we have ahead of us is just insane. The drinks is a massive market. On the supplement side, again, we make it for pro athletes, and pro athletes are taking it. Like we see the online orders, like we see orders coming in from pro athletes. I'm not going to tell who's ordering what, but like people that you would recognize, and they're buying it, and we're getting feedback from someone saying this is the best product I've ever had. So you can't get a better testimonial than that. Right?
Yeah,
like
and
that's just honest, legit feedback from a customer who also happens to be a pro athlete.
Well, I mean, when I tested the product and I tried it, it tasted healthy. It didn't taste like sugar.
No.
And when I drink Gatorade, it tastes like sugar. When I drink Prime,
it does
it
now.
tastes like extremely like sugar. And I remember looking at my son when he wanted Prime all the time, and I'm like, this tastes like sugar. He's like, no, there's no sugar in it. I'm like, oh, it tastes like sugar. It tastes like sugar. I know what sugar tastes like.
It looks like a duck, smells like a duck, quacks like a duck, walks like a duck. Like at a certain point, I don't care what the hell you do with it. Like it is what it is, man.
Yeah.
Right?
And
one of the other things
One
of the things that I think is underappreciated too is like the colors. So now you're starting to see what everyone thought was just like this innocent thing. Oh, it's a food color. Like who cares? It's just food coloring. No, well, the food coloring is really bad for you now.
Yes.
Right? Like whether it's the red dye or the yellow or the blue or all the different colors that people are using. Like most people don't do this because you kind of just drink it out of the box. But if you pour this out, it's clear. Like, there's no color on this. It doesn't need to be. The color's on the box where it should. Right?
That's right.
It doesn't really need to be in the liquid that you're going to drink. And I think,
100%.
again, these little sort of things that have been thought of, things that are incorporated into the product that, added benefits that people might not fully appreciate, but there's a lot of thought that goes into making things like that. Even on the powder that does have a color, that's actually a food extract. So it's not an artificial color, right? So like as an example, if it's red, it's coming from cherry. If it's blue, it's coming from blueberry. Right? It's not an artificial color. We use
your margins. Your margins to me are what is really, really interesting because like the car companies right now, like the tariffs potentially could shut down the entire car business because they operate on a 10% ROI. Yeah. So when you're talking about these massive margins, like that is not normal for any company to have these types of margins. That I think alone can really make a huge difference for you guys, because when you're talking about doing 15 million a year in sales with those types of margins, that's very impressive for a small company, a new company. Could you guys potentially see yourself being a like a buyout candidate one day or an acquisition target with the way you're growing with your revenues? Or are you guys looking to just grow this out?
Look, I think the path forward can kind of go a number of different ways. I agree with you. Like the margins that we're able to achieve, I think are very much sort of world-class margins. Now, this is why, so much money can be made in CPG, especially for investors. Like if you take a look at some of the highest returning stocks of all time, it's not tech, not mining, it's Coca-Cola, Monster, Celsius. Like these CPG companies can achieve absurd multiples because of the fact that there's recurring revenue at a very healthy and attractive margin, and that's really the value of building a brand. Now, as we continue to grow, sure, people, anybody can come knock at the door. I mean, we'll decide whether it makes sense for our investors or not, whether we want to take it. But our real path forward is not sort of build something and hope we get taken out. I think we're the ones that go out and start taking out other people. That's the way that we build this. So as we continue to grow, like I think that this particular space, like if you go back and take a look at Monster and Celsius. So when they were out hitting these high double-digit, low triple-digit, quarter-over-quarter growths, like in their sort of early stage hyper-growth phase, they were trading at like 20, 25 times sales, okay? Now, when you go and take a look at them now, obviously those multiples have come off, but their quarter-over-quarter growth has either slowed or started to stagnate. So even like Celsius was growing at one point, like 100, like, Q2 over Q2 would be like 100% growth or 120% or 90%, right? And they just kept hitting that stride for 7 years. There's nothing that Celsius does that we don't know how to do. But where I think there's huge value when you're out sort of hitting those margins is we can then become the acquirer. We don't have to sit here and wait to be acquired. We can build huge value because there are a ton of brands, like really good quality, solid companies that are making fundamentally great and phenomenal products, like great, healthy products. Well, these companies can otherwise be bought on the private market, 1.5 times sales. Well, if you're going to buy something at 1.5 times sales, and then we have the route to market and distribution where we can go and expand that sales, instantaneously by just driving it through all of the pathways that we built. And then you in turn get the multiple, the Pubco multiple in the 20s or 25, even if we're hitting at 10, everything becomes accretive by default. You end up building value just by virtue of going out and buying these things. So sure, if somebody wants to come and take a run at us, okay, we can't stop anybody from doing anything, but that's not really what our plan is. Our plan is to become a healthy version of what craft actually is. And we've got all the capabilities to do that.
That's really exciting and impressive for investors. So you're not looking to be a seller, you're looking to be a buyer and an acquirer, which is really exciting. And that's why we do these interviews. Go ahead. We do these interviews to get a feel for what the company's plans are, what the management's thinking, where you guys want to be in, the next couple of years. So it looks like you guys are in this game for the long haul and you want to continue to acquire your growth, which as an investor is, what we're looking for. My next question is, I want to get more into those reorder rates. So can you share insights into the average reorder rate across all new accounts? And how does it compare to the industry benchmarks?
Sure. Look, we'll be putting out some news over the next little bit on sort of the reorder rates. But I can tell you, we landed Sport Chek, I think, in August last year. Like Sport Chek's national retailer in Canada. If you're watching in the States, it's like our version of Dick's Sporting Goods. They've taken us national from day one. They've reordered 8 times already. And each order just comes with, increasing velocity. They need it faster and faster and faster because it's selling through. And again, that's also a testament to the retailers because they know how to do it and how to merchandise it properly. And that way they put it in places that it sells through quickly. But we're also getting customers coming in and reordering. So, that's just one example. Like I said before, I don't think we have any account that hasn't reordered multiple times already. So for us, we're very, very pleased with how that's going. Chippy. We announced that Coach Chippy SKU. Rich, have you tried that Chippy SKU yet?
No, I have not.
All right, I got to send you some. So
I would love some.
It's pineapple yuzu is the underlying flavor, right? Nobody's really done a pineapple hydration drink. Why? Because artificial pineapple tastes like crap. At least I think it tastes like crap. This tastes like straight up pineapple juice. Like, it's phenomenal product. To put it in comparison, like, our sales guys tell me that, like, the best selling sports drink in Canada is Gatorade Blue, right? Like, that specific Gatorade. All the other ones sell great. The Gatorade does fine, right? Gatorade Blue sells about 6,000 cases a week, steady.
Okay.
We've sold 20,000 cases of Coach Chippy in like 2.5 weeks.
Wow.
We put it in vending machines, and it's just starting to hit the stores now. Like, people were buying it like that. Like, just, we've never seen anything like this.
Wow.
And John, like, you guys have met John. John has done SKUs in his previous life with like Pat Mahomes and Connor McDavid. Coach Chippy has outsold Pat Mahomes and Connor McDavid. Okay.
Wow. That's impressive.
We put it in vending machines in the arenas that we have all the deals with. Remember I was saying, like, the grassroots stuff? Okay. So we put it in the vending machines in the arenas. We'll have to restock them 3 times a day, every day.
Wow.
I got parents calling me saying, dude, like, this thing's sold out again. Like, it's always sold out.
Wow.
So, like, listen, we kind of caught a little bit of lightning in a bottle with that one, but those are the right kind of, like, limited time offerings that you do. And you have your core flavors, like, that's the sort of business, like the fundamental business that you build off of. And then you add a couple of these fun new flavors throughout the year, and you run them limited time. It's like the McRib, right? You can't get the McRib every day. You can get it through this time window. And then, you wait for it for when it comes back next year, and then you go buy it again. Well, it's the same thing, right? Like, we run these limited time offers. In this particular case, we went out and did another run because it sold out way faster than we would have thought. And again, I think it's a testament to the marketing mix, the quality of the product, and then just the general response you have with your customers, right? You have to listen to your consumers. And that's one thing I think we do really, really well. So on the reorder side, yeah, from what I can share here until we actually sort of go out and announce, reorders are there. And that's what builds base load revenue. So as we start building this, like, you get to that, we're going to do 15 mil this year, okay? You get to that 15 million and it's all based on sort of accounts that are reordering. Well, that becomes your base load revenue, right? You can count on that. You can depend on that. Now, when you're building next year, you're already starting with that and you're building on top, right? And that's how you actually start to grow. And then you turn those accounts into reordering accounts, which then makes base load revenue. And there's no shortage of opportunity across Canada, the US. Like, we're already selling in Europe, Rich.
Wow.
Like, right now, our revenue is about 70% Canada, 20% US, and 10% Europe. Like, one of our investors, I think he's the best hockey player in the German league. So he brought it over there. And now all the German league wants to drink Quench. So now we're getting distributors to start going out and stock shelves in Germany.
Wow. Amazing.
Right? Like, again, like, this isn't, I don't know how else to say it. Like, this isn't typical. Right?
Setti, we got 375 people watching on X alone. Can you tell me, and you've been doing a great job explaining this, what strategies, and you've mentioned a little bit, but I want you to get into detail, what strategies does CizzleBrands have in place to ensure not just account growth, but also high reorder rates, which you mentioned, and long-term customer retention? Because customer retention is the key, right?
Exactly. But that goes back to the reorder rate, right?
Yes.
So the stuff that we do, like, when you first asked about, like, stuff with, the athletes and all the athletes we have. So yes, we've got Nathan McKinnon, we've got Andrew Wiggins, we've got Adriana Leon, we've got Gavin McKenna. Gavin's already projected to go number 1 overall in the 2026 draft. Chloe Primerano.
Oh, you guys got Gavin?
Yeah, man.
That kid is insane.
Yes.
That kid is awesome. That's like the next Connor McDavid. That's crazy.
Yeah, he's Connor Bedard's half cousin.
Oh, is he?
Yeah. This kid is unbelievable. He's got a swagger about him. The guy can light up a hockey rink. Like,
he makes plays that you've never seen before. You're like, what? Like, what was that?
He's a generational talent, right? He's already repped by, like, agents. Like, he's going to be a big deal. Yes, he signed him. Okay. Jada Ginla, we got Jerome McGinley's daughter. So some of the stuff that we do when we're going out and helping to engage with our community is we'll try to run these aspirational programs. So, if we're going to run, hey, like a pricing promotion, you can buy 2 for $7. It's really going to be built around, all right, if you buy 2 for $7, then you get to enter a contest where you can skate with Nathan McKinnon, or you can shoot free throws with Andrew Wiggins, right? These like really cool activations. Or now that we even got the creators like Coach Chippy, right? Like we could do skate with Chippy, and you get all the creators there, and you could play like a game of shinny. Like those are the types of programs that we look to build with our athlete ambassadors to then create, basically bridge that gap to sort of everyone else on the consumer side, where you get to actually have a chance to interact with them. And I think that's what really starts building a lot of authenticity for the brand, for the product, for the consumers to actually get behind. And, it's something that we know how to do. Like we know how to build those communities. And that's exactly what we go off and sort of do day in and day out. And that's why I think and you see it on the news flow, like that's why we get all these accounts coming in, right? Like you can have all the relationships in the world, but if you don't know what you're doing and your product is crap, it's not going to matter. The reason these retailers are calling us so that they're even in the conversation with us is because they know we know how to execute. And when they take our product, we take care of them, right?
You're building community, you're building enthusiasm, you're building spirit, team spirit. I mean, we saw it in the Four Nations face-off. Like that was like lightning in a bottle. I mean, they took this idea of a all-star game and turned it into like the biggest tournament maybe in history of the NHL.
Rich, every other sport now is looking at the NHL saying, how do we do that? And I don't think that's ever happened.
Yeah, and like you said, lightning in a bottle, that was a makeup tournament. They made it up last minute, and those players were playing like for keeps. They were like fighting for when
Canada won, it felt like they won either gold medal, the Stanley Cup. Like it was like that level of emotion.
It felt like we were fighting for our sovereignty.
Yes.
We were fighting for our sovereignty because tariffs were being talked about. Trump is
how good was it? Canada, US,
the US team before the game. You want to talk about having a lot on the line? Those Canadian players felt like all of Canada needed them to win that game for us to have like a little bit of self-respect, because Canada's kind of getting trolled by Trump on a daily basis right now. So it was almost like we were fighting for respectability. So the fact that you guys are playing in that sandbox, doing these types of things like shinny hockey with the community, I think is brilliant. I find it brilliant. Now, I want to ask you a question. We got 375 people here on X alone, over 400 people watching on all the different social media platforms. So with the stock, when you guys launched, you guys were at 24 cents, went to a high of 62. You're currently sitting around 39 cents in Canada, 28 cents in America. You just got listed on the OTCQB. Congratulations on that. You're listed in Frankfurt, Germany as well. So lots of good things happening. But there was a shareholder that came out and sold a large block of stock, and it created a little bit of volatility in the market. Can you explain a little bit about what happened there and what the company's looking to do to ensure and enhance that the market is operating in an ordinary manner?
Yeah. So, what can I tell you? I had a guy that came in. We were raising at the 30-cent round, and bought like 2.5 million shares. And for whatever reason, his broker just tells him, "Oh no, you can't invest in companies like this. You have to only put it in blue chip stocks." And I got to get you out of here. And one of the things I'll tell you, like that conference that I was at, the best comment I got was like from brokers and some of the other exhibitors that they came up to me after the fact and said, "Holy cow, you guys are actually like a real company." I said, "Yeah, of course we're a real company." And a lot of times in, let's call it the junior cap space, there's ideas and dreamers and stories of things that might happen but never actually do. I think we're able to show people that if we say we're doing something, not only do we do it, but we probably exceed those expectations. Anyway, for whatever reason, this guy got convinced by his broker that he didn't want to believe it. So he just starts unloading shares. And it was done in such a stupid way where they would set these icebergs. So it would be like 1,000 shares, say at 49. But there's 100,000 shares behind it. So anybody looking at the market would only see 1,000 shares. Like, okay, I'll buy the 1,000 shares and it'll go up. But it would just keep sopping up all of the volume. So now anybody else above looking to try to sell is not catching any action at all. So they get frustrated. So now they leapfrog them. So now it goes to 48. Well, then this guy says, no, I'm going to go 46. And then it goes to 45. And it basically leapfrogged each other all the way down to 32. There was one day, I think the guy sold 650,000 shares in one day, which was absurd. Now, on the flip side, we also have a market that could absorb 650,000 shares. Anyway, we had a couple of shareholders that called us saying, like, because he was trading under, particular broker number, like, who is this idiot? And we put together sort of a block trade, basically bought out all of the shares. So he doesn't have any left. He sold out. Great. Now he can be on his merry way. And, we'll rebuild the market back from that, which I think we've done a pretty good job in a short period of time. And I think it'll continue to rebuild. But it was basically just driven by a guy that didn't really understand how to trade at all. Right? Like, look, not for just Cizzle, but in general, Rich. I mean, like, you've run these trading academies, okay? And you tell me whether you think I'm wrong. But when it comes to stuff like this, especially with companies at these particular stages, it's not really a good idea to kind of just dig your heels in, because you're not really allowing the company to grow on just purely on the capital market side. So the way that I would do it, you guys do whatever you want. But if you had like a block of shares, say if you had 100,000 shares, don't go sell 100,000 shares all at once. I would put 5,000, say if it's at 39. I would put 5,000 at 39, 5,000 at 40, 41, 42, 43, all the way up. And that way, as the market starts to build and go forward, you get taken out at increasingly higher valuations, and you're not creating these roadblocks along the way that don't allow the stock to move, because then people get frustrated, right? And you have to clean all that crap out. And then it starts to go. So I think we did a good job of cleaning the crap out. Stock's starting to move in the right direction again. But you just have to kind of understand how to actually trade if you're going to be trading on these things. Smaller sort of drips and drabs along the way, one, allow you to make way more money, and two, allow the price to increase along with you. So you want to ride the trend up, not basically dig your heels in where you stop the stock from going, or worse, just try to drive it down because you go hit market sells. That's bad too. So if you're in, trading these, let's call it smaller cap companies that, are not trading 100 million shares a day, try to see if you can find the level 2 and actually play along within the market. It's called an orderly market. You'll end up making way more money. You won't spook anybody. And that way, I think everybody ultimately ends up doing a lot better, because look, at the end of the day, even from an investor standpoint, I want everybody to make money. And if they call me, I'll give them my advice. But, it's not, there should never be sort of a race to the bottom to be the first one out, especially when you're building a real business that has a proper engine in place, right? It's not like I got a push cart trying to convince people that this is a Formula One car.
Yeah, one thing that I'm always teaching new investors, and a lot of new investors don't know this, is there's two types of orders. There's market orders and there's limit orders.
Exactly.
When you sell at market, the broker's deciding what price you can sell at. So you're kind of putting your money in the hands of the broker, which is not the safest way to trade.
No.
I like to sell and put a limit order up and sell in blocks. So I'm not selling all at once. I'm not holding the market down. I'll just sell in blocks, like, 5 or 10,000 shares at a time.
Bingo.
Put it at my price. When my block of 5,000 sold, I put up another 5,000 and I'll sell at the highest possible price.
Exactly.
If I sell it at market, and let's say there's a spread of 35 cents by 40 cents. And if I'm going to sell limit order, I'm going to try to sell around 39 to 40 cents,
Bingo.
which is where all the buying's coming in. But, and a lot of selling's coming in. But if the bid is at 35 and I sell at market, the market maker is automatically going to have your sell go at 35. So you're losing 5 cents there, which
Rich,
is a lot in a penny stock.
I've seen this a couple times where somebody will come in and do a market sell. Okay. They're like, oh, I'm going to sell whatever, 50,000, 100,000 shares. Okay. Well, again, if you can't go see what the level 2 is and that there's actual bid support there that you can sell into, all of a sudden you're going to crash the stock, right?
That's right.
But what it does is it creates a gap. So I've seen this happen where I think it was at like 45 or 50 cents and somebody market sells and it sells it all the way down to like 32 because it was like 100. So like from basically 45 down to 32.
Smashed all the bids. Smashed all the bids and
smashed
takes it
all the bids.
Yeah.
Now there's a big gap. So smart guy watching says, all right, well, I'll go take 1,000 shares at the offer. So the price goes back to where it was. And then the book builds again behind it. But you, the seller, is sitting there wondering why the stock's still at 45, but your net average sale price is 36.
Because you sold it at market.
Because you sold it at market.
And there wasn't enough bid support. So you smashed all the bids and you had more order size than bids. So you smashed through all the bids. And now your price discovery is selling at way lower than the market price. And as soon as you're out of that trade, the price is going to go right back up. And you're going to have an average sale cost of, like you said, like 35, 36 cents. And the market's probably trading at 40 5 minutes later. And you just lost all this money. So at the end of the day, it's not a good way to trade.
No, it's a terrible, terrible way to trade, right? And again, this is just a function of, sometimes it's just a function of educating people, because some people just don't know, right? If you're used to buying NVIDIA and you're buying 1,000 shares, okay, buy it and sell it as you please. It doesn't matter, right? In these earlier stage companies that are building their market, it's something that you need to pay attention to. So maybe you're not going to get off your full block in a day, but give yourself 3-4 days and you're going to make way more money than if, you need to rush sell today. Don't put yourself in those positions as investors. And again, that's not just with our company. That's any company really. Understand where the bid ask spread is and kind of put yourself in the flow of where the money's going. That's all.
Setti, we always tell our investors when there's a lot of fear and volatility in the market, that's the best time to buy.
Yeah.
So in your opinion, to recap the opportunity for investors with Cizzle Brands, we've got over 400 people now on X alone. Why do you see Cizzle Brands as an early mover in the space with a lot of upside?
Look, I think we've been, and again, this is not just me saying it, like the numbers prove it. And I think that's the key difference between us and maybe a lot of other, let's call it CPG stories that have otherwise been tried to sell to the market. The sales are there. The reorders are there. The community that we're building is growing. We're starting to expand out into the US as well. We're starting to expand out in Europe as well. There's no shortage of news flow coming, and this is all just organic accounts and new business that we're building. We're not putting out releases that I tied my shoes today. Like, this is all real stuff. And I think as investors start to learn more about us and they go in and start to take a look at the numbers that we actually deliver. And I'll tell you, yes, any CPG company that's growing at this pace is going to lose money for the first couple of years. But we also raised $20 million before we went public. A lot of that is used for working capital. So this is all growth capital that we're going out and spending money on to build the brand that actually starts generating sales of 15 million this year, 35 next year, 90 the year after that. And those aren't hopes and dreams. That's not, hey, I wish. That's all planned growth. That's relationships that we have. Those are all the contacts that we know how to go out and leverage. And that's all the business we know how to go off and get. And I think, like I said, the key is, are you able to keep turning this product? And I think we're definitely able to keep turning the product. Like, the best feedback that I've gotten so far from some of the retailers is they're asking us to raise the price. They're like, you know what? You should probably be at about $4.29 instead of an everyday $3.99. No, we'll keep it at $3.99, at least for now, because I'd rather have the velocity and build that consumer base, right? But the fact that retailers are calling you saying this is selling so well, you might want to consider raising your price, I think is the absolute best feedback I could possibly get. And that's what I'll leave the investors with. Like, you don't usually get that, especially as an early stage CPG company. Hey, your price is too low. Come on. At $3.99, which is already selling at a premium.
Hey, that's good. That's a good problem to have. We are here with Setti Coscarella, the head of corporate development of Cizzle Brands. Symbol is CZZL in Canada, CZZLF in America, and also listed in Frankfurt, Germany, under the symbol 8YF. We've been here for, almost an hour now, and we've got over 400 people on X alone. Is there any parting shots or anything you want to say to anyone that's watching before we say goodbye today?
I'll say, listen, first of all, thanks for the time. I always have a great time talking to you, Rich.
Always a pleasure.
I think, for Cizzle Brands, we've got an enormous trajectory ahead of us. I think we've been able to demonstrate that we can do a lot in a very short period of time. I mean, this company was still idea on paper about a year ago. Within a year, we've raised this money, we've commercialized the product, we've gotten national distribution, we're selling product in Canada, US, overseas, we've taken the company public, and that was our first year. So I'll let you imagine what we can do in year 2. I'll leave you with that.
Oh, that's a mic drop moment from Setti Coscarella, the head of corporate development for Cizzle Brands. Thank you for joining us today, Setti. Love to have you back again on the show. We're leaving with 417 people on X that are watching. We've had some members interested in the sample product. We'll get those samples out to you guys as well in the starter pack. And thank you guys for watching. If you like these videos, please smash the like button, comment down below, share the video everywhere, and subscribe for future updates. CZZL in Canada, CZZLF in America on the OTCQB exchange, and once again listed in Frankfurt, Germany under the symbol 8YF. Thank you, Setti. We'll see you again soon.